In recent years, we have witnessed a fascinating phenomenon in the U.S. stock market. Investors are pouring capital into the S&P 500 at an unprecedented rate. This prestigious index, which comprises the 500 largest publicly traded corporations in the United States, has become a symbol of economic strength and stability. What is driving this surge in popularity, and why does it seem as though nearly everyone is investing in it? The S&P 500 has demonstrated impressive performance in recent times. As of February 10, 2025, the index reached a value of 6,066.44 points, reflecting a year-over-year increase of 20.69%. However, this growth is not an isolated occurrence. It is part of a broader trend in which the index has, since its inception in 1957, delivered an average annual return exceeding 10%. Approximately 6.37% after adjusting for inflation. This long-term expansion underscores the resilience of the U.S. stock market and its ability to withstand economic turbulence, whether in the form of recessions or periods of rapid recovery. The current economic landscape provides fertile ground for the continued growth of the S&P 500. A stable labor market, low unemployment, and strong consumer spending bolster the market's fundamentals and add further momentum. A key factor also lies in the easing of inflation, which had previously been a major source of uncertainty. The Federal Reserve has taken a cautious approach to monetary policy, seeking a balance between curbing inflationary pressures and stimulating economic growth. This carefully calibrated stance provides markets with much-needed confidence. Another critical driver behind investor enthusiasm is the ongoing technological transformation. Artificial intelligence, automation, and groundbreaking industrial innovations are creating unprecedented opportunities across sectors. While much attention is given to the so-called Magnificent Seven, the seven largest tech giants, the current wave of technological expansion extends far beyond the IT sector, reshaping industries such as healthcare, finance, and manufacturing. This means that growth is not concentrated in a handful of companies but is instead spreading across a wider spectrum of firms, enhancing the diversification of the index. Investor confidence has surged to levels unseen since 1987, further reinforcing the market's bullish momentum. The primary factors behind this optimism include the resilience of the U.S. economy, which makes American equities more attractive compared to other developed markets. Political stabilization following elections and expectations of business-friendly reforms, such as tax cuts and deregulation. Corporate earnings growth across various sectors, signaling long-term sustainability of expansion. Despite this overwhelmingly positive sentiment, the market is not without risks. Persistent inflationary pressures could force the Fed to take a more aggressive stance, leading to higher interest rates that might slow down the stock market. Another source of uncertainty is the geopolitical landscape. Trade tensions or conflicts could inject volatility into the markets at any moment. Additionally, the lofty valuations of some companies may limit their future returns. Nevertheless, the outlook for the S&P 500 remains cautiously optimistic. Forecasts suggest an average return of around 10% in 2025, marking the third consecutive year of gains. The U.S. economy continues to display solid fundamentals, while technological advancements provide an additional catalyst for growth. However, investors should maintain a level of prudence and ensure proper diversification within their portfolios. The current investment frenzy reflects widespread confidence in the long-term potential of the U.S. market, but every trend operates within cycles. The key is not just to ride the current wave of growth but also to be prepared for potential market fluctuations. The S&P 500 remains one of the most compelling investment assets, yet its future trajectory will depend on a delicate interplay of economic conditions, technological progress, and geopolitical developments. Thanks for watching.